Hey guys, Mike here. So, oh boy, what a huge intraday move today. I mean, we got the inflation data, which I'm going to go over for you. It was not good. Shocker there. The market just tanked in pre-market. I mean, it dropped like from positive 1% to like negative 2.5% on the NASDAQ. Huge move down. And then, we're going to go over a bunch of stuff on this, but I like this meme right here. The bears are like, yep. We got you, bulls. Go ahead and tap because it is all over. We are heading down, brother. And then, boom, to the left, or as you see, this is the red. That's the morning. And as soon as about 9:45 hit, this thing started moving up. And I can guarantee people were loading puts like crazy. Think we were heading down. And I think it's like the third largest intraday move in like the history of the stock market. It was almost a 6% move from one swing to the other. And you can see Google, all the big boys, just started roaring. And what really brought the market back up was semiconductors, who had been just beaten down a hammer for the day, the big boys, and then bank stocks. BlackRock reported this morning. You have the other ones reporting tomorrow. I did find it funny when I looked back at when they reported July, I think it was 14th or something. That's when we went on a huge run. And like FAS, which is the 3X ETF, bullish ETF for banks, is up like 12% today. So who knows if this is a setup? And so we'll see what happens. We'll see what happens. But yeah, it's a funny move because a lot of the risk off stuff that was green yesterday was red today. The Kathy Wood stocks and all that stuff, anything with high beta was pretty much red. And so, CPI guys, I mean, pretty much somebody in comments almost hit it on the head, right? You can see this is month over month right here. And, it's increasing. You've seen an increase, last month. And so, still going up, still not really coming down. And obviously we talked about this. Core CPI is going to be really tough to get down because so much of it has to do with housing and stuff like that. And it's just stuff that's really, really sticky. And when you look here, I mean, it's not like things are going up a lot or anything, which is good. And, you look at this right here. Let me just scroll over and mark this up here. Fruit and vegetables. That's one of your big increases. I don't know what's going on with that, but fruit and vegetables was a big one there. And, I can definitely vouch for that because we buy a lot of those in our household. So that does not surprise me. You look at energy, it fell off a cliff. Now, of course, what's happening now with energy? It's higher than it was in September, and that's going back up. Gas is going back up, so that's going to be interesting for the next CPI report if that still continues. The other one, you got transportation services and stuff. Way up right there. Healthcare is up again. And, if you just look right here, this is what I'm talking about when I'm talking about rents or anything to do with the rents. And you can see this chart right here. I mean, obviously it continues to spike up. Looks like a meme stock chart for crying out loud. And so another thing that ain't going to help, which I saw this morning, I'm glad for Social Security beneficiaries, but it definitely is not going to help inflation at all. In 2023, so in 3 months, they're going to be doing an 8.7% raise for Social Security. And please hit that like, subscribe button, and share the video if you get anything out of this, guys. I really appreciate it. And again, I'm glad they're getting it because they need it to fight inflation because millions of people are on Social Security, and some of them, it's all their income they have. But I'm just saying from the perspective of, Jerome Powell's upset about wages increasing and stuff. Well, this is just more liquidity in the market, for towards inflation, more money to spend. But it is what it is. They got to do it. Got to offset the extra cost, right? And it comes to inflation. I'm telling you, I keep telling people, and any business owner watching this will tell you the same thing, that the reason why it's going to be hard to get this inflation down is because if you had a product, let's say you're selling it for $1, and you just keep increasing to $1.05 to $1.10, and customers are still paying, and you're not seeing demand destruction on your product, why would you lower prices? It would make no sense. Why would you do that? You wouldn't. There's no way you'd do it. You're not going to sit there and lower prices until you actually see people stop buying the product, right? The demand going down. And right now, for a lot of stuff, that's not happening. The big ticket items, maybe we're going to find out, right? The cars, the housing, that kind of stuff. Absolutely. But other ones, no. I mean, it's just, and one thing we're spending on is experiences, right? And so, like, how do I know that? Because Delta reported, right? And they come out this morning, as you can see right here, and they were up pretty big when they did earnings or whatever. But, they report net income of $695 million on record revenue. The results of a surge in summer travel, of high fares to match, which I'll show you in a minute. While travel demand continues to improve, they do warn that the recent rise in fuel prices will pressure their ability to remain profitable for the December quarter. So we'll see if that keeps going. The other one was Taiwan Semiconductors. They came out. Obviously, it's not experienced, but just throwing this in here to you because I was sending this out to the members this morning. That they actually beat the numbers, but they are warning that they're cutting their costs by 10%. Because they kind of see what's ahead of them and stuff, but still overall, the 1 year year-over-year basis, earnings jumped 67%, while sales advanced 36%. So not bad. And this is what I'm talking about, where Delta CEO came out and said, he said the travel recovery continues as consumer spend shifts to experiences and demand improves in corporate and international, which I did not expect to see. And you can see right here what I'm talking about when I say airfares. Again, it looks like another meme chart almost. Look at this thing. Just taking off. So yeah, really, really high. And this goes all the way back to 1999. So they are charging a whole bunch and people are still flying. I was really surprised about the business side of things, especially international, because a lot of companies said they were cutting back on that. But I guess the demand's still there so far. And so again, record revenue for them. And that's what I'm saying when I see out there. Let me know what you see out in your areas or whatever. People are still going out and doing stuff, still traveling, still going down to Disneyland and Six Flags and all kinds of stuff, right? And so, obviously that's slowed down a lot now because school's back in for a lot of parents and people are back to work. But, that's the thing we got to be looking out for and listening up for when you want to talk about the health of the economy. I understand things are expensive. I get it. Trust me. I look at the grocery bill every week and it sucks. And I was wondering why fruits and vegetables were so high. Now I know. But what I'm talking about is the big ticket items right here. Mortgage rates reached 20-year high. Up to 30-year fixed mortgage jumped 6.92% from 6.66% last week. So we're almost to 7%. I said we'll reach 8. I wouldn't be surprised. I said before year end, and you're going back to 06 days then. That was kind of normal back then. But I'm sure people got sticker shock when they're going in to buy a house at 8%. It's like, the monthly payment is so much higher than it was just 2 years ago, if it's been that, right? It's just, oh my goodness, that just sucks. And so I don't know, we'll see what happens on that, because tomorrow, remember, you got big time bank earnings coming in tomorrow. Jamie Dimon's out there running around doing his interviews today, talking about, they're sitting on $1.2 trillion in cash. And so there is, and I already reported that last week anyway, that had dwindled down from like $2 trillion to $1.2 trillion. So, again, still a lot of money. They're just parking it at the Fed, earning their interest rate and stuff on the repo part of things. But, I can't imagine the numbers being that great just because, investments, no, that's not happening. There's no IPOs really going on. A lot of stuff on the investment side has to be just dead for them, right? And that's where they make a lot of money. And a lot of us are just parked on the side sitting in cash, or we're not even giving them our money anymore. So it's going to be interesting to see what the banks have to say. I'm going to let you guys know what they say. It's important to listen to them. This is the financial health, right? How stable are they? What do they see coming down the pipeline on the credit and debt markets? That kind of stuff. And so it really is important to understand that. I'm glad we get them all basically in one day. BlackRock's wasn't too bad today. But, and I think it was funny too. It's crazy. I looked this up. Man, and this is what I say when something bad can happen, and we're back in that mode like we were in 08, about too big to fail, letting these financial institutions get so big. Like BlackRock is so big that it is bigger. You can add up all the banks, JP Morgan, Wells Fargo, Citi, I think every one of them. And I think like BlackRock has more assets on hand than all of them combined, right? And then when you go to financial institutions, investment firms, BlackRock's number one. Vanguard didn't even know was right behind them. They were sitting at $8 trillion. BlackRock was at $9 trillion. They've lost. They're down to $7 trillion. So this market is really taking a hit on them. So I'm assuming Vanguard's around maybe $6 trillion, something like that, $5 trillion. But if you add up just Vanguard and BlackRock together, they have just as much assets as like Fidelity, TD Ameritrade, like all of them. Charles Schwab, all of them combined almost. It's insane. right? So, and with BlackRock, what worries me, Vanguard don't worry me. I know what they're into, but BlackRock, what worries me is they have a lot of overseas exposure, especially in China. And I don't, who knows what they're tied up in over there. They have a lot of ties in Europe, and so that's what kind of worries me about firms like that. And they take a lot of risk, and so it's kind of like, because they know why. What's the attitude? We'll get bailed out, right? If something happens, so that kind of worries me a little bit. I mean, people say, "Oh, it can never happen." They say the same thing. No way, it could never happen, and it happened because they didn't realize what those firms were tied up into, and all the shenanigans they were doing. And so, we'll see how this plays out over the next 6 to 9 months. But again, my biggest concern is the bond market, stuff like that, municipalities and stuff being able to raise enough money to keep things going. That's really where I think it's going to come down to. But understand the CPI data this morning. The reason why the market tanked right off the bat because they realized with the hot jobs market report we already got, with that pretty much solidified 75 basis points in November. Okay, and so but I guess the market, who knows? You can put down the bottom. I think personally, what happened was market makers said, "Oh, everybody's putting puts in. Oh, screw them, bam," and they trapped them, and then boom, it started rocking it up, and then shorts started covering in certain things, and so again, when things get super bearish, when you think it's going one way, it'll reverse when you turn the other. Now, who knows what's going to happen tomorrow? I think who knows if banks are even going to determine that. But, this is what you get in the market. Like I always say, buckle up. The only thing you can expect is volatility, right? And we'll see, because a lot of people, when things get so bearish, are call and say, hey, things are getting to levels now where they can start to bounce, or, again, we break the 200-day on the weekly and start heading down. We'll have to see, because with today's rally, that was a big move back up. So, we'll see what happens. I'll let you guys know what the banks say. It's going to be an interesting week. A lot of people are calling for a short-term bottom in October to start rallying at the end. Who knows if that's going to happen or not. But anyway, and I will say, like I told the members, or will tell the members that, these, even though these leveraged ETFs and stuff, man, a lot of people are in the inverses. Those leveraged ETFs are getting to levels we hadn't seen in a long time. They're getting really cheap down there, and I know some people personally who are starting to average into them, waiting for a swing, because when it swings, they move up fast, right? And I think that's something else you're starting to see. So anyway, have a good night, and I'll see you probably tomorrow. All right.